Good morning, everyone. How you doing today? Still off in New York, actually getting set up today. Got to go rent a car and get out to this family wedding. But I thought I would start it off as I always do, talking about what I saw in the market today. First off, looks like we're set up for our eighth day in a row of gains, which I think is interesting. And if you've been following this channel for a while, you'll know that a lot of that is because of kind of our concerns over the last month all seem to be kind of tilting a positive direction, right? Think about what we were talking about 30 days ago with Hong Kong and the protests and how that could be a flashpoint for something, a black swan event. Then think about what we've been seeing in the trade war the last couple of days or the last couple of weeks. It seems to be heading in a much more positive direction. We have delays going on with tariffs. We have China sort of adding agriculture as an exemption list, and we have these rumors about an upcoming kind of interim trade war agreement. So I think there's been a general understanding by both countries that a trade war is good for no one. For the first time, we see kind of some back and forth that's positive, right? In the past, we've seen, I did this, you did that, I did this, you did that, which was all negative. Lately, it's been, hey, you did me a favor, I'll do you a favor, those things heading in the positive direction. So lots of stuff going on that are kind of calming the bigger fears that we have. What I think we're going to start to see is we're going to start to see some real negative numbers from the trade war because we can't undo what was already done. So a couple of things that I'm watching for, and I actually called this out for you on Sunday. One of them was just reported today. It looks like inflation is running a little hotter than expected. It was up 0.2 or annualized at 2.4%. That number is pretty interesting to me because inflation has been the one bugaboo by the Fed saying, hey, we need to see inflation. We don't have inflation. We're worried about disinflation or deflation. And, we have free reign to lower, right, if there's no inflation. Well, I know you meet next week. I know you meet on Wednesday, Mr. Powell and the Fed. I know you're already baked into a quarter point cut. I think the whole world knows that. But hey, look at, this inflation number. Again, it's a point in time, so we'll see. The data sometimes is muddy. And these have been revised down or up even historically. So we'll see what happens next month. But I don't think, if inflation truly is running at 2.4%, I think the talk track of, hey, the Fed's going to lower 4 meetings in a row has to be taken off the table. I've come out and said on this channel probably 3 or 4 weeks ago that I thought the Fed would lower 4 times in a row. Actually, even before some of the other experts out there were talking about it. I think if inflation is running at 2.4 or even north of 2, I mean, how could the Fed cut? So we'll see what's going on. The big number is tomorrow, and I talked about this on Sunday, and that's retail sales. I already see some articles out there now talking about Amazon's Prime Day is big enough now, and it occurred in July, that it could have pulled forward demand. People are already starting to create excuses by why it's going to be a dirty number. It's interesting that some people are still calling for a 0.2% rise. There's a couple people talking about 0.2% negative. I actually think it's going to be more negative than 0.2, right? I think what we saw is, sure, okay, Amazon Prime may pull demand in, granted, but I think what we were starting to see is the trade war was starting to impact the consumer, right? We talked about the first couple of tariffs being aimed at components, and basically the end manufacturers were absorbing most of that. Then we saw us hit agriculture, which stopped, China importing. Then they came back and hit tariffs that hit our consumers, and I think that was starting to happen. So we will see. Tomorrow will be an interesting day. I will certainly be looking at that number. Again, not a stock guy. I'm a real estate guy. So what I'm looking for is, okay, what's the consumer thinking? Are they getting scared, nervous? Because, again, the consumer is the owner-occupant buyer, whether it's the first-time buyer or the move-up buyer. So these are interesting things for me to watch. Another one that was interesting is Goldman Sachs came out and cut Apple. This is interesting to me, right? Apple's like Amazon, like Google, like Facebook, one of these big high-flying stocks, huge multiples, lots of profit. And this is interesting coming a day or two after their announcement, which I think was on Tuesday. A lot of it's because of Apple TV. I trust, the price point they put out there for the streaming service, given their small library. They're doing something with that. They're trying to buy demand, but that's going to come at a cost. It's going to impact profits. And near as I can tell, there wasn't any big hoopla for the new iPhones. But again, it's pretty early to tell. So we're going to see what happens there. Another one that I am watching is SmileDirect. SmileDirect is one of these unicorn stocks, unicorn stock being one of those that had billion-dollar valuations. They went public yesterday, so congratulations to them. Unfortunately, they led off with the worst one-day decline of any IPO stock in recent memory, a 28% decline. So think about that. Right, you go out, I don't know what it was, I didn't write down the numbers, but if they go out at 40, they're now priced at 30, right? Lots of people lost on that. And what I think this is going to is the unicorn stocks that really had high valuations, people are starting to question, right? So you saw Uber and Lyft months ago not perform very well. You saw Slack, have some problems. Now we have SmileDirectClub. And oh, by the way, let's not forget WeWork, who's been going through this tumultuous IPO process. They've just rechanged some governance procedures, basically diluted some of their Class A stock, which had 20-1 voting power, now 10-1. All these things. It's pretty clear that WeWork is going to go come heck or high water, but that's probably, that doesn't bode well, I think, for valuations post the day of IPO. Of course, we had Sam Zell come out and basically really crush WeWork by saying every company who's ever tried to be a mass subletter eventually goes bankrupt, right? When you rent by the foot and rent by the inch, or buy by the foot, rent by the inch, it doesn't work in a down economy. And I think we all agree that a down economy is in front of us before another big run. So pretty interesting stuff. And I don't know if I mentioned it earlier, but China did add ag products to their exemption list, which I think is really going to help the farmers of the U.S. who've been suffering in soybean and all of that stuff. So pretty interesting. And then the last number that kind of freaked me out is just saw that our deficit hit $1 trillion, and it's only, I don't know, what is it, September, October? Gosh, I don't even know what day it is. But anyway, so that's a big number, right? $1 trillion deficit. Thank goodness we have low interest rates. Otherwise, the cost of debt would be astronomical. So, at the end of the day, that's what I'm watching. I'm actually going to record a second video here about what's happening in California with rent control. So stay tuned for that. But I wanted to see what this is all about. All right, everybody. Have a great day. Take care.